it's not a bearish indicator. It's actually pretty bullish. So what we're looking at on this chart on the left side is just the number of all-time highs we've seen in 2024 alone. There's been 46 of them. You spend almost 7% of your time at all-time highs, which is not a small number.
No.
You know, a lot of the times the market is at all-time highs. And the other measure that they polled is how often does that all-time high support the floor, meaning the way they measured that is you don't go down any more than 5%. Well, that's only about 30% of the time. That's to be expected with normal 8 to 10% pullbacks. You're not going to be putting in a floor every time. But when we look to the right and we say, how is investing at all-time highs? On the green bars, you're going to invest at all-time highs. The gray bar is investing on any other random day. In the short term, the 3 to 6 months, the random day is better. But when you start looking 1 to 5 years out, you actually perform better investing at all-time highs, which would make sense. You're investing while the market's trending higher. Something good is happening in the economy. You're in a bull market. And what you see, the scare headlines on TV of markets are at all-time highs, it's time to sell, they don't like to tell you is employment's at all-time highs as well. We're seeing growth in employment. Corporate earnings are also at all-time highs, but earnings season just got kicked off a couple days ago. Not a whole lot to mention there except the financials, which have reported, look pretty good from the bank stocks. Inflation's at cycle lows for this bull market. That's something that's bullish for the market. It makes sense why we're seeing this rally. And Fed funds rates are high, but they're likely coming down. That's the risk. If inflation starts to tick back up and they don't start cutting rates, I think where the market is priced now, we'll have some difficulty. But at least now, like we showed, the trend looks good for those numbers.